Welcome back to The Explainer. Today, we're unpacking the massive macroeconomic debate surrounding the 2026 crypto market, and we're going to zoom right in on the fascinating, honestly chaotic journey of one specific project, Yei Finance. I'm super excited to guide you through this today, because the sheer contrast between broad market forces and individual token stories right now is just absolutely wild. I mean, seriously, think about this massive question for a second. It perfectly captures both the extreme, gut-wrenching risks and the relentless momentum of DeFi today. How on earth does a project get taken for millions of dollars, completely brush it off, and then skyrocket when literally everything else in the market is bleeding out? To figure that out, we really have to start by looking at the big picture. Section 1, 2026, Bull or Bear, the macro crypto debate. Okay, so to understand the micro movements of specific tokens, we first need to look at the macro perspective. On one side, we've got the bears pointing straight to systemic liquidity drains. They're looking at real-world economic headwinds, things like global tariffs, stubborn inflation, and high interest rates that are just pulling money right out of risk assets. But on the flip side, the bulls are arguing that the game has fundamentally changed. They believe that these massive institutional spot ETF inflows have basically broken the old four-year halving script, and they're stretching out the traditional market cycle into this longer, much more resilient climb. You can see this sentiment all over the place. Just look at what Reddit user Robbie Dukes posted. It perfectly sums up that bearish exhaustion out there right now. It's that specific kind of market fatigue, where you just expect a slow bleed right until the exact moment you look away, and then boom, it pumps. But then, in stark contrast, you've got others arguing this really fascinating contrarian view, like Real Prince Zuko here, essentially saying, well, since everyone expects a crash based on those old four-year models, we're obviously set up for a massive 150K Bitcoin rally, right? It's the ultimate psychological tug of war. Section 2. Enter Yei Finance, the microcosm of market chaos. So how does all this macro volatility actually play out on the ground? Let's look at Yei Finance. At its core, it's what's known as a liquidity abstraction layer. I know that sounds super technical, but basically, think of it as a platform designed to seamlessly connect fragmented capital across a bunch of different blockchain networks. By bringing all that liquidity together under one roof, it generates higher yields for liquidity providers and makes moving assets so much easier for the end user. Now, the crucial starting point here is the massive scale of the project's tokenomics. We are looking at a hard cap of nearly 1 billion tokens. Understanding that sheer volume is absolutely essential when we're evaluating its long-term value and scarcity. But here is the catch. Only a fraction of that supply, roughly 129 million tokens, is actually circulating in the market right now. That establishes an $18 million market cap, which means, sure, there's huge room for growth, but there's also a massive overhang of future inflation coming down the line. Section 3, the flash loan exploit, a $2.4 million heist. Setting the stage here, investigators from Merkle Science actually did some digging and linked the December 2024 Yei Finance breach to two previous major DeFi attacks, Ireland in 2023 and Onyx in 2024. So this wasn't just some isolated incident, right? It reveals a clear, ongoing pattern of targeted capital exploitation by what looks like a sophisticated serial attacker. So how exactly did they do it? Well, they targeted a highly specific vulnerability in the protocol's reserve logic smart contract. By taking out a massive flash loan, they forced a sudden change in the liquidity index. This basically tricked the system's math, allowing the hacker to withdraw far more value than they deposited, all while burning way fewer tokens than they were supposed to. Just like that, they walked away with $2.4 million. And the laundering trail? Total nightmare to track. They chain hopped across multiple networks, from CAI to Bitcoin, over to Ethereum, Base, and Arbitrum. But here is genuinely the most ironic part of the whole heist. They parked over $1 million of the stolen funds in DAI stablecoins. I mean, think about that. Even hackers are terrified of macro crypto volatility right now, so they literally locked in the absolute value of their haul to avoid the market swings. Okay, and here is the wild plot twist. In traditional finance, a multi-million-dollar heist like that kills a startup overnight. Done. But by cooperating openly with investigators and immediately pushing out a postmortem, Yei Finance did the seemingly impossible. They fully restored stakeholder trust and raised a $2 million seed round just 2 weeks later. Section 4, the listing day pump, surging amidst a crash. That remarkable resilience really set the stage for October 14th, 2025. The CLO token pumped an astonishing 52% in just a few hours. We're talking a jump from its initial listing price of 16 cents all the way to almost 27 cents. And remember, this massive surge happened while the broader crypto market was completely crashing. The trigger? Instant mainstream exposure across massive exchanges like Binance and KuCoin. That exposure triggered intense FOMO, bringing in nearly $16 million in trading volume in a single 24-hour window. You add in Binance airdrops and some heavy futures leverage, and you have the absolute perfect recipe for a micro pump right in the middle of a macro crash. Section 5. Future Price Predictions. Forecasting CLO. So where do we go from here? How do analysts predict the future of a highly volatile asset like this as we look toward May 2026 and beyond? Well, CoinGabar laid out a pretty bullish case. They suggest that if the platform actually delivers on its liquidity ecosystem roadmap, the token could eventually stabilize and climb toward that highly coveted $1 mark in the long run.
But you can't ignore the other side of the coin. Looking at the bearish case, CoinCodex's recent quantitative models are flashing a pretty stark warning for the immediate future. Based on overbought technicals and those overarching macro headwinds we talked about, their models expect the price to dip down to around 10 cents within a month.
So, the crucial takeaway here is that Yei Finance's trajectory is literally a perfect reflection of the broader market right now. It is caught in this relentless tug-of-war between the harsh macro realities that are pulling it down and the immense micro potential of its technology trying to push it up. After seeing how one single project can survive a multi-million-dollar exploit, restore investor trust in a matter of weeks, and then skyrocket during a broader market crash, I'm going to leave you to ponder this. The immense duality of risk and reward in this space is just unlike anything else on Earth. With all this data on the table, are you positioning yourself for a brutal crypto winter or the super cycle of a lifetime? Thank you so much for joining me on this explainer, and keep learning.